According to recent speculations, these coming weeks will see the issuing of an executive order regarding cryptocurrencies from the Office of United States President, Joe Biden, and a comprehensive strategy for the regulation of digital assets will be developed with the assistance of many government entities as part of this process. So, President Biden is reportedly expected to sign an executive order in the coming weeks to begin government regulation of cryptocurrency. What is going on? And do you think crypto can be controlled? Hello and welcome back to Crypto Cash Channel. What do you think about the issue of crypto regulation? And how soon and fast do you think it will happen? In today's video, we look at the speculated full crypto regulation and why it will kill cryptocurrency. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. According to Yahoo Finance, in the next weeks, United States President Joe Biden will issue an executive order that regulates cryptocurrency. And this is not the first time because, in January, it was first speculated that the government of Joe Biden would issue an executive order regulating the use of cryptocurrencies. In order to develop a government-wide plan to control crypto assets, according to a report that was published by Bloomberg, a wide variety of government institutions will be tasked with studying cryptocurrencies and central bank digital currency. This will be done in order to develop a plan to regulate crypto assets. One such project will be commissioned by a number of government departments, including the Treasury Department, the Department of Justice, and the Department of Homeland Security. Concerns regarding the relationship between digital assets and financial stability will be investigated by the Financial Stability Oversight Council, and the International Monetary Fund believes that cryptocurrencies may in the not-too-distant future pose a risk to the country's capacity to maintain their financial stability. An inquiry will be carried out by the Attorney General's Office, the Federal Trade Commission, and the Consumer Financial Protection Bureau to determine how the growth of the cryptocurrency industry can influence the competitive landscape of the market. Recent FTC warnings have focused on a variety of fraudulent investment schemes including cryptocurrencies. Several regulatory agencies, including the Commodity Futures Trading Commission, the Securities and Exchange Commission, the Federal Reserve, the Federal Deposit Insurance Corporation, the Office of the Comptroller of the Currency, and the Federal Deposit Insurance Agency, will discuss potential actions to protect the nation's financial markets. Gary Gensler, the chairman of the Securities and Exchange Commission, said a week ago that the SEC will work along with the Commodity Futures Trading Commission to oversee the cryptocurrency market. The United States Department of the Treasury will, after consultation with the Securities and Exchange Commission, the Commodity Futures Trading Commission, and federal banking agencies, create a report for the President on how to limit the risks presented by cryptocurrencies. And within the context of this executive order, they will also investigate methods to protect companies, consumers, and investors. There will also be a discussion on technology pertaining to stablecoins, privacy, and distributed ledgers. This year, both the Federal Bureau of Investigation and the Department of Justice have formed new divisions to combat the abuse of cryptocurrencies. There will also be a discussion on the possibility of coordinating crypto standardization efforts with other countries. Robert O'Feel, a member of the FSB, made a statement not long ago to the effect that authorities all around the world are going full speed on crypto laws. And in light of the proliferation of international digital market activity, he continued to say that the existing structure is no longer enough for the task at hand. And now, on both sides of the Atlantic, discussions are taking place to determine whether or not cryptocurrencies should be regulated. The European Union is still wrestling with problems such as penalties, mining rights, and how to integrate its 27 member states under a single umbrella. This is in contrast to the situation in the United States, where authorities are at war over stablecoins and taxes. The proof-of-work mining restriction proposal that was included in the Markets in Crypto Assets proposal in March 2022 was shot down by the European Union Parliament. Proof-of-work, which is used by several major cryptocurrencies, including Bitcoin and Ether, which will switch to a cleaner proof-of-stake mechanism this year, has been a point of contention for regulators and the larger cryptocurrency community for a very long time. This is because proof of work requires a significant amount of power to validate transactions. But now, the research by Deloitte states that crypto proponents continue to exercise caution. According to Deloitte, the new language of the MiCA stipulates that crypto assets should be subject to minimal environmental criteria within the ambit of EU nomenclature law. Even though an outright ban on mining appears unlikely for the time being, the new language of the MiCA stipulates that crypto assets should be subject to these criteria. And that's not all, it even gets more interesting. Guess what? In the years to come, methods of mining that need a lot of energy might potentially run into new regulatory issues if there are not already defined regulations in place. The most recent events that have taken place in the state of New York provide more indication that mining is not even close to being finished. The mining of proof of work will be placed on hold for a period of 2 years while the full General Environmental Impact Statement evaluation is carried out, as stated in Bill A7389C, which was sponsored by both Democrats and Independents. With the bill having recently passed through the state assembly, the approval of Governor Kathy Hochul might have repercussions for legislation not just in the United States but also in Europe. This is the situation, as stated by Javed Khattak, who serves as a chief financial officer at Checked. And in spite of the denials made by the EU, there will be some laws coming surrounding the EU about the environmental effect of crypto assets, maybe in the form of a tax. This makes sense when seen from their perspective due to the fact that the government stands to benefit financially from it as well. Then, the armed invasion of Ukraine by Russia had, and continues to have, a significant impact on the discussion around the EU's proposed law on cryptocurrencies. At the recent CryptoCompare Digital Asset Meeting 2022, which is Europe's main institutional summit for digital assets, Emily Nicole of Bloomberg noted that that's one location where authorities and regulators are really starting to tighten down, in reference to sanctions. In conjunction with this crackdown, the European Union has reaffirmed that sanctions against Russia and Belarus encompass crypto assets in all of their forms. However, the vast majority of cryptocurrency transactions are managed by centralized exchanges, which may or may not have the greatest relationship possible with the regulatory authorities. For instance, Binance, the largest cryptocurrency exchange in the world, started enforcing its verification policy on all of its users in August of 2021. The exchange formerly imposed withdrawal limits on unverified customers, although these limits have since been lifted. Basic verification does not need a photo ID, and unconfirmed KuCoin users are allowed to withdraw up to 1 Bitcoin every 24 hours. Because of the aforementioned sanctions, there will undoubtedly be a heightened level of scrutiny placed on the compliance procedures of the exchanges. On the other hand, other markets, particularly those that have a major presence in Europe, take a more proactive stance toward the regulation of their markets. Coinbase and eToro need all customers to go through the KYC process before they may utilize their services. Julian Sawyer, Chief Executive Officer of Bitstamp, a cryptocurrency exchange based in Luxembourg, and speaking at the CryptoCompare Summit in March 2022, stated that it's a very simple headline to say crypto is a spot where you can dodge sanctions, but he doesn't believe that it is accurate. With a total value locked of more than $194 billion as of May 6, 2018, DeFi's significance is consistently growing, despite the fact that it represents just a small part of the overall value of the cryptocurrency market, which is measured in the multi-trillions of dollars. Trading is made possible on decentralized exchange systems by the creation of user-generated liquidity pools, which are utilized in place of middlemen such as banks and brokers. But there are still open questions about how trustless financial systems may ever be brought under regulatory oversight. The MiCA framework does not attempt to solve these challenges in any way. An extraterritorial strategy in the same spirit as the General Data Protection Regulation is actually a possibility. However, as Credo's Benjamin Whitby stated in an article for TechCrunch, it remains unclear how authorities would enforce against organizations outside of the EU. This is despite the fact that certain authorities aren't interested in decentralized finance. But overall, we believe that it is going to be quite exciting how the DeFi world merges with traditional financial services. And that's all for today's video. Thanks for watching. Do you think governments will win the war of regulation? And will crypto survive after regulation? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.